ByBit is one of the biggest crypto exchanges, and in this video I'm going to show you how to use it. So this is a really deep dive into ByBit. We're going to go through everything. So if you haven't signed up yet, please use the link down below. This is the referral link that comes from me, and basically if you use it, you'll be able to get up to $4,000 of additional value depending on the conditions. So we both win something if you use the link down below, and it will be easier for you to use it this way to sign up. So starting up, after you go to the sign up page and basically sign up with your email, you'll be able to verify your profile, and after verification you'll be able to deposit either crypto or fiat. So one of the coins, one of the currencies. So basically there are a couple of ways to really deposit funds into ByBit. The first thing being either using one of the methods like credit card, using a bank transfer, or doing P2P, so peer-to-peer. Depending on the location you're in, you'll be able to do that or not. So fiat deposit, there's a bunch of banks you can use to deposit. Additionally, if you already have crypto coming from other exchanges or from your MetaMask wallet or somewhere else, you'll be able to deposit the coins directly. There's a bunch of coins you can deposit and also a bunch of chains you can choose. So for example, for ETH, you have a bunch of layers too that you can use to deposit. So after depositing, you'll be able to see all the assets in your asset overview. I have this account here with $1,000 basically, so we're going to play around with that. So basically there's a couple of things as you can see. There's spot, derivatives, funding, earn, trading, bot. What it means is basically this. Buying on spot crypto basically means that you're buying the asset and you have the underlying asset. So if you buy on spot, for example, ETH or Bitcoin, you really have that Bitcoin and ETH in your wallet, so you can withdraw it directly to other exchange, to other wallet, and you own it. So this is really great. Then you have derivatives, different futures, perps, which allows you to bet on the future price of Bitcoin, Ethereum, or other cryptocurrencies. You'll be able to use the margin, you'll be able to trade on leverage, but you won't be able to, for example, withdraw that position to other exchange. So that's the minus there. There's a bunch of things also which allows you to, for example, stake your coins, which means this is basically like putting the money into the bank using the classical interest accruing over time. So you have a bunch of things like that. Let me start with just the basic trading. So if you go to spot, you'll be able to see, for example, like ETH, and you'll be able to trade that. So if I click on trade, I have a couple of options. So I can buy ETH either with USDT, BTC, USDC, DAI. So I have 3 stable coins and BTC. I have USDT, so I click on USDT. That's the standard stable coin, which is basically 1-to-1 to dollar. And now we have the screen with a chart with basically pricing the Ethereum right now. I have the candles for 15 minutes. I can change a little bit to like more trading view. I can see on the depth for like whether people are more buying or selling, and what's the trajectory, what's the momentum of the market. Now, the crucial thing here is that we have the order book. So order book is usually, well, it's every exchange. It basically means it's the way to see what other people are doing, like what people are willing to pay to buy Ethereum in this case, or sell Ethereum. So the top price on the buy side, on the ask side, is basically what people are willing to pay to buy one Ethereum, and then the price on the up, the bottom price, is basically the price that people are willing to sell one Ethereum for. So for example, if I were to buy on spot, which means that I really will get the tokens, I have 2 options. So first of all, I can just do the limit order, which means that I put one of the prices. So for example, it's put here for me, and I say like I want to use like 25% of my account, or I can change that to, for example, $200. I could basically put the order price, and then if there is some seller on the other side that want to sell me for that amount, we're getting connected, and he or she sells that to me. So for example, I could click buy right now, right? I have the confirmation, this is the limit buy, and it's the order is filled already. So I'd be able to see that in trade history, everything that I have, the current orders, past orders, basically the order that I have, right? So basically also I'd be able to sell. Now I can also use the market order. So market order, if I click that, I can use that both for buying and selling. This is the simpler option if you don't want to think about the price. Then basically then market order is the easiest thing. Basically what you do is you're telling to the exchange that, hey, I'm just want to buy it for the best price possible and figure that out. So for example, if I want to sell now that if I want to sell 100% of that, I use the market, which means, as you can see, there's no amount for the price I want to sell. This will be figured out by the exchange. So if I click on sell right now, there's a confirmation, there's the order value, so that's approximate for right now. As you can see, it changes from second to second. I click on sell and voila, I just sold ETH. So it is as simple as that. I just bought some Ethereum, sold some Ethereum, everything was done here. Now we can do something more complicated. So basically those are market order. I can also go to TPSL, which means I have trigger price, stop loss, trailing profits and stuff like that, which is a little bit more complicated. But if you want to, for example, put limits on where you want to take profits, where you want to stop your losses, this will be crucial. For now, just market buying is fine. The best strategy in the end for acquiring crypto is basically just DCAing, which means dollar cost averaging into positions. So just buying, for example, each week or each month, small quantity, so that you really don't, your position don't really depend on the price. So that's worth knowing. This is it for buying on spot. As you can see, it's really simple. So let's get to the next thing, and that is buying on margin. So margin basically means that you're borrowing funds in order to buy crypto. That's of course is much more risky. So for example, if I were right now to short Ethereum, which means I'm betting that the price of Ethereum will fall down, then basically I'd be able to borrow funds for that. Let me take, for example, 25% of my funds and basically click on short. So in order to do that, I'd be getting for 0.03 ETH almost. That's the order price, because I can take manual. Oh, let me actually do the market. So I have the same type of orders, right? So I can take limit order or market order. I won't have to mention the price. The market order will be better probably. So again, I'm clicking market order. I'm clicking on selling. Margin is 3x, which means it's 3 times leveraged. 0.03 ETH, that's the quantity, order value $500, and that's the amount to borrow. There's a daily interest rate for that borrowing, so that position will actually cost me money for holding in the long term. This kind of things people do when they want to do it for short term. So for example, if you want to leverage your position, you are super confident about the given coin going up or down and you want to bet on that, then probably using margin is fine. So let me click on that, but remember it's like super risky in the end. And then in borrowing and repayment down below, you will see my position with auto borrowing, right? So you have it here. Now, if you want to repay it, you can repay it directly here, but in order to repay it, I will have to have this ETH bought later on. So especially, so for example, if I'm betting on like ETH going down, then I'll be able to buy this ETH for a cheaper price later on. That's the whole idea behind it. So right now I will have to buy on spot the same amount of ETH basically. So let me go ETH USDT, and basically, yeah, I want to get ETH, and I want to get around 0.31 ETH in order to in order to repay my debt. So I'm clicking on buy. The price should be fine. Is it submit? Yeah. Let me see. So you can see right now that the order is not being filled because the price is actually a little bit higher. So let's see if it goes down or whether I should change the price in order to pick it. So if it's going up actually, so let me cancel that and take another price. So I take this price, and again, I want to have 3 ETH around that. Yeah, I'm going to buy. So this is the limit buy. Let me see. Yeah, and that was filled successfully, as you can see. So now what you can do is actually you can repay your debt. So you can go to the assets overview, or for example the spot. Let me just click on spot, and you will have a look over everything. So you can see here that I have a total equity of 1,500, and I got this 500 because I have taken a loan in ETH. So net equity is still 1,000 because I have a total liability of $500. So the risk is less than 50% because your position can be liquidated forcefully if you go below a certain level. So for example, if ETH was to go up in price, I was betting that it goes down. I won't be able to pay off the debt. The exchange, the ByBit, will liquidate the position for me. So you have to really be aware of that. Just buying on spot is simple because you never be liquidated. Well, the coin can go to zero, of course, but apart from that, you never be liquidated. You always have the coins. So that's the thing. That's why people are losing on margin and on perp so much money, because you can always go to zero. So yeah, let's repay that. So I'm going to repay all of that. Confirm, and that's it. So I just repaid. I have zero liability right now, $1,000 equity. Yeah, and I can go on. So this is how you go with margin. There's a little bit more advanced concept called perps, and I wanted to discuss also in the case of Ethereum what are perps exactly, because perps are basically these contracts and you're betting. So margin is basically borrowing money to buy on spot, but perp is a little bit different because on perp you're actually betting that the price will go up or down. You don't own the actual ETH. So that's really interesting, right? So for example, I can go with cross and isolated. For this tutorial, I won't be getting into details. I want to get into the simplest thing possible, but basically cross and isolated are used to especially when you have multiple positions and you want to have them be isolated, basically. There's no influence between the others. You have basically two things you can do. You can go with leverage and you can go either longing or shorting. So basically leverage is, again, the same thing as with margin, but in this case it works a little bit differently. So you can get the leverage up to 100x, but taking 100x basically will blow your capital in a minute or even less. It's basically a roulette, so not recommended, definitely. Well, I usually use either 3x or 5x if I'm really convinced about the particular coin. It might be a lot depending on your risk appetite in general. So let's go for 5x. The thing is similar, right? So you have the perp, meaning you have this contract, you have the price, so it looks super similar to what the usual buy spotting is. You have the order book. The price might be a little bit different from the spot price of Ethereum, and then you can open and close different positions. So for example, I can still go with limit market or a conditional based on, for example, trigger price. Let's go with market, that's the simplest. I go with 25% of what I have. I could choose, for example, to have TPSL, so take profit stop loss thing. I won't do it here, but you can use it in order to limit your losses or take profits at a certain point. So 25% market, and I'm going to open long. Okay, probably I need to. Yeah, I'm going. As you can see, this is the cost of the order. It's much lower, so 0.3 ETH. That should be something around $400 or for 50. It's 100 just because I'm using the margin. So I'm opening long. Oh, I have. Okay, yeah. So that's another thing I have to do. Insufficient collateral, which means I have to transfer my assets between spot derivative. So transfer spot to derivative, right? I'm going for USDT, and let's transfer all of it from spot to derivatives, so I'll be able to use perps. Yep, that's transferred. As you can see, everything right now is in derivatives. Now I can go back to ETH USDT perp and do what I wanted to do. So basically open long with 0.3. I could even take right now 25% of the account, so 0.7 ETH, and I'm going to open long. So that's the summary. 0.7 ETH. Liquidation price, this is if the ETH would go to $300, I would get liquidated. Cross 5x, so 5x being leverage, cross being either cross or isolated position. Yeah, and time enforced, immediate or cancel, so either it will get on or it will be cancelled. And confirm, and here it goes. It was filled. So I have a bunch of things already I can see. So you can see all the statistics. So you can see, for example, the effective leverage. That was 5x, but because I have put 25% on of the capital, the effective leverage is actually 123. Now the value is $1,000, 120. Enterprise 1,600. Mark price, liquidation price is the moment when ByBit will liquidate my position. That's 300. Position margin, so that's the amount of capital that it costed me to get into that. Now I have the unrealized PL, which is basically the thing that I should gain when I close the position, and the realized PL is everything that I have paid so far, which means that you pay for the position because you pay fees to ByBit, and also having the position, having a perp will cost you money. So again, perps are not good for long-term holding. If you want to long-term hold any kind of crypto, just buy on spot. Like buying on spot is the best thing possible you can do. It's the easiest. But if you want to play around and trade, especially on a daily basis, then you should be, you can try, or maybe not should, but you can try with perps or margin trading. As you can see, the ETH is going up, so I have the $2 of unrealized P&L. I can market close or I can limit close. Market close is the easiest thing. It will close my position right away. Limit, I can put the price, $3. Let me, yeah, I'm going to close it, and that was it. So it was closed. So let me go to order history. As you can see, I open long, closed the long, closed PL. Let me see what I have else here. Yeah, so basically this is it. I just think I made like $2 or something on trading, minus the fees, I guess. Yeah, so that's it. That's also super simple. I could also do the same thing for so I could close the positions also from this space. I can open short position. So again, shorting means that I'm betting that something will go down. Again, for example, I could take, let me go with market, let me go with 10% and open short just to show you. So this is the estimation liquidation price. As you can see, it's the other way around right now. So it's $5,000, which means that if ETH go to $5,000, my position will be liquidated. That's the quantity of ETH I'm shorting. It's almost 0.3. And yeah, again, cross 5x, let's go. So I just open a short. And again, I have realized P&L, which is the thing I paid. And then unrealized P&L, which is everything that is getting on right now. So because you have this many movements, you can see what's going on here. If I go up, so yeah, right now because I opened short, I'm basically betting that if will go down. So if it's going down, I'll be able to take a profit on that. As you can see, it already went down a little bit. You can see my position, those red dots, and a green, which is where ETH is right now. So because ETH is falling right now, I'm making profit. I mean, it's not realized in any way, but if I were to close it, I should make a profit. So if I market close right now, everything, that should give me another dollar. So I guess $3 in total. That's the revenue from opening and closing shorts. Yeah, so that's the simplest thing which you can do on ByBit. There's a bunch of more complicated things because you have also not only perps, but you can look for more general futures, which has a particular date to end. You have copy trading. I probably will talk about that on another occasion. Now you have also leverage tokens, which is like buying on spot but with leverage. So for example, you have a token that is 3x Bitcoin or 3x Bitcoin short, 3x Bitcoin long. That's basically like buying on leverage, and you can also go in both directions. Pretty interesting. You have NFTs within the platform. That's pretty new. And you can also earn. So as I said, ByBit Savings allows you to basically put your money to work. It's a staking product. You have a couple of things you can use to earn. There's a launch pool, so there are new coins launched on ByBit regularly, so you can look for whatever is happening on ByBit. As you can see, there's a bunch of tokens being listed. That's the most recent listings. Of course, always do your research before going into any kind of new token listing. Other things, they have those different statistics around the market, which is really great. So in total, you have things like new listings, what markets are doing on different, whether spots or derivatives. You have a bunch of things with like changes, the volume. You can go by basically the maximum volume, the bit. So that the bit is coming from the ByBit, that the coin from ByBit. Pretty interesting stuff. In general, there's plenty to do. Basically, the ByBit platform is very complex if you want it to be, but it can be very simple if you just want to buy on spot different crypto and hold, or something in between. You can try using trading bots. That's also something new. So grid bots, maybe just as a finish, I will talk about grid bots. Grid bots allow you to basically earn money by going through market fluctuations. So basically you have those lines where the bot will buy or sell a given token. It's not really hard, but in order to have good parameters for the bot, you need to think about whether you actually, where is the point of breaking down, and like where is the line of support and stuff like that. So there's a bunch of parameters that's going into grid bots. Really recommend watching the tutorial about the grid bots. I probably will cover grid bots in another video as well, in more detail. Worth thinking about it if you want to be serious about buying. But if you just want to start, if it's your first cryptocurrency buy, then go with either Ethereum or Bitcoin. Those are the two most popular cryptocurrencies right now. Buy them on spot, just use the market price. That's the easiest way. And also DCA, dollar cost average, that's the easiest way to actually buy regularly, not thinking about the price. It will be the best in the end for the long run. Thank you for watching, and again, don't forget to use the link I have down below for ByBit. That's the referral link that will allow you to basically get up to $4,000 of different gifts, depending on the conditions, of course, but you'll get something for sure. ByBit is great when it comes to offering different discounts, fees, and so on. So really recommend it. Check it down below, and don't forget to subscribe to the channel for more news about crypto. Thank you for watching.